Welcome back to the channel, everyone. Today I want to talk about Citadel investors being concerned all over LinkedIn. I also want to talk about how the stock market is currently crashing. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, if you've been onto Citadel's LinkedIn page recently, you will have seen that pretty much every single post is getting tons and tons of comments from concerned investors and also obviously AMC investors. Firstly, we've got a comment here from Stephan. He says it was a very interesting Clubhouse session, but I am getting a bit concerned as I have a lot of money invested. It seems that my money might not be as safely invested as I thought it was. Is it true that GameStop and AMC are massively shorted? I do not want my money to bet against these stocks because this seems dangerous. Stephan then read Al from Boston's article on LinkedIn and sent him a direct message. It said, "Hello sir, thanks for sharing your article. I read it and it opened my eyes. Sitting here in Germany, I was not really aware of what's actually going on and how much risk my money is really at or really in. I will keep reading more about this and take consequences. I'm thankful for every piece of information." There's also another comment from Thomas Henderson saying fantastic conversation as per Ken Griffin. However, many investors in Citadel are curious about the outstanding shorts on AMC Theatres and GameStop Corporation. Truly hope there is some recollection about this in the near future. There's also yet another comment from Nick Saucedo. He said, "Hello, it's come to my attention that Citadel has opened short positions on stocks that have gone up significantly in the last year. Does this put investors' capital at risk?" And obviously the answer to that question is a resounding yes. Now I think it's great that we've already managed to get so many comments on their LinkedIn posts, and they're coming from accounting professionals, they're coming from acquisition project managers, they're coming from investment professionals, and many other people. Some investors in Citadel, and obviously some AMC investors. This is a brilliant way to bring to light and expose exactly what's going on with Citadel and with Ken Griffin through use of websites like kengriffinlies.com. It's a brilliant way to bring it to the attention of their investors. Because probably few high net worth individuals use Twitter on a regular basis and keep up to date with the AMC hashtag, but many high net worth individuals use LinkedIn on a regular basis and would already follow Citadel if they have investment in Citadel. I personally think that LinkedIn is the best grounds to bring attention to Ken Griffin's lies for those Citadel investors. Now obviously the reason we're trying to do this is because if we can get Citadel investors to withdraw their capital from Citadel, it will mean that Citadel have to sell off their long positions and cover their short positions in order to return that capital and pay down their margin. Don't forget, when Citadel short a stock or go long on a stock, they're not just using their invested capital. They're actually using 6 to 8 times the invested capital because they're using a lot of margin and a lot of leverage. Therefore, if somebody wants to withdraw their $1 million that they have invested with Citadel, Citadel have to cover $6 million worth of shorts or sell off $6 million worth of long positions. Also guys, if you didn't already know, Moomoo are currently giving away up to $17,500 in free stocks just for signing up with Moomoo and making your first deposit using the link in the description below. Moomoo also have an excellent investing platform. They've got free real-time level 2 market data, they've got advanced charting tools, they've got 24/7 real-time financial news so that you don't miss any important announcements, and a global investment community so that you can get ideas for your next investment. You can get all 5 of these free stocks by firstly opening a brokerage account, secondly depositing any amount, and thirdly depositing $2,000 to get those final 3 free shares. Now, Al also tweeted at Cat Striker saying it would be a crying shame if someone took out a full-page advertisement in the New York Times, the Wall Street Journal, or the New York Post with the title, "Citadel hasn't covered their short position in GameStop and AMC." And even worse, if the other 15,000 funds based out of New York saw it. Now, Kat did reply saying it's an insane amount of money for a full-page article for the New York Times, but Al did reply asking her to price it and find out because he's curious. Again, I do think if we could get a full-page article in the Wall Street Journal, that article or that paper is read by pretty much every single investment professional. Therefore, not only would we be targeting Citadel investors, but we'd also be targeting Citadel employees. Again, it would just bring to light exactly what's going on at Citadel and with Ken Griffin, even to the Citadel employees, who might then think twice about working at Citadel and might think twice about becoming a whistleblower. Now, I do think it might be difficult to get an article in the New York Times, the Wall Street Journal, or the New York Post, because obviously many of these mainstream media news outlets are actually owned by hedge funds, and it wouldn't surprise me if Citadel has actual capital invested in these news outlets. Now, something that I found very, very interesting is that AMC is being invested into not just by the younger generation, or not just by the older generation, but pretty much every single generation. Around 16% of Gen Zers hold AMC. Around 12.59%, so nearly 13% of millennials, also hold AMC. Around 7.3% of Gen Xers also hold AMC. And around 2.16% of baby boomers also hold AMC. And therefore, AMC is one of the top held stocks in every single generation. It's not just Gen Z investors, it's not just baby boomers, it's every single generation. And therefore, when investing in AMC, apes really are standing together from all walks of life and from all ages. Now, I also want to talk about the VIX and the wider market. As you will have seen over the last 5 days, the VIX has been trending up heavily, hitting a recent high of around 34.62. Now, the last time the VIX was over 34 was on the 27th of January when GameStop ran up. And prior to that, the only other time that the VIX has been over 34 was obviously during the pandemic back in March of 2020. Therefore, that I do think over the next week, the VIX will continue trending upwards and the stock market will continue trending downwards. I guess we'll have to see how volatile the VIX gets. Maybe it will slowly start trending towards that 40-45 region over the next week, or maybe it will jump drastically to the 50, 60, 70 region. From looking at the S&P 500 over the last week, again we can see it trending downwards pretty much every single day. Over the last month, it looks like it's starting to fall off a cliff face. I suppose when you look at the yearly chart, obviously it's not a big drop yet, but I do think that next week the VIX is going to continue trending downwards, probably to this September region, and could continue trending down even further, maybe back to 2020 levels. Herb Greenberg recently tweeted saying, "Don't ask me why, but I just decided to pull up this chart on margin at brokerage accounts, but oh my god." I spoke about this in one of my recent videos when I talked about margin levels at broker-dealers and other institutions being at new all-time highs. As you can see, between the year 2000 and the year 2020, margin levels stayed fairly flat. Yes, there was some movements upwards pre-2008, followed by the crash, but between the year 2000 and 2020, there isn't too significant of a movement. But if you look at the margin levels post-2020 in 2021, you can see the margin levels have increased significantly, nearly doubling from that 2000 level. This is incredible that it took us nearly 50 years to build up to $300 trillion or $300,000 million, but it only took us one single year to go from $300 trillion to $600 trillion. Now, Mark thinks that high margin debt could create a similar 25% correction to the S&P 500, just like it did with oil, but it would happen far faster as algorithms will jump on to exploit the move, inflicting even more pain to those falling victim to margin calls. Now, this is the important part here. There are going to be hedge funds and institutions falling victim to margin calls, and algorithms and other institutions will jump into short positions, making it even worse. Therefore, those short hedge funds that are currently shorting AMC but are very, very long on the wider market could very, very quickly find themselves becoming margin called, especially if they operate with high leverage. Maybe a firm like Citadel that operates with over 6 times leverage. Those firms out there that operate with 0 leverage, like Vanguard and BlackRock, will be fairly safe, but firms that operate with 2 times, 3 times, 4 times, 6.8 times leverage like Citadel are in a very, very risky position. Now on top of this, Evergrande have just officially declared indebtedness on offshore international bonds and do not think that they can meet repayments. China Evergrande Group plans to actively engage with offshore creditors to work out a viable restructuring plan for the construction company's debt, according to a company statement filed by Evergrande. They said there is no guarantee that the group will have sufficient funds to continue to meet its financial obligations. Marco Meltzer said, "We are vindicated by this official statement. We have still not received the interest on our bonds, although it was widely reported in the press that interest payments had been made on time, where interest payments were past due in October and November. This declaration represents an event of default for all 23 outstanding international bonds valued at $23.7 billion. But, as I've also noted previously in my videos, it's actually much worse than that, as it also has huge implications for the credit default swap market as well. We know that the market for insuring bad bonds is potentially 50 times the size of the underlying bonds. So therefore, that's potentially $1 trillion worth of credit default swaps that were sold on the $20 billion worth of bonds. Therefore, that could be $1 trillion these banks are going to have to pay out when the $23.7 billion of bonds officially enter default. Marco said that almost all of the cash will be lost and very, very little cash will be recovered. The MSA is preparing a bankruptcy petition against Evergrande Group. And therefore, it seems like the interest payments for the Evergrande bonds never actually got paid at all. I did find it very, very interesting that as soon as mainstream media reported that the bonds had been paid, there's basically been no coverage of Evergrande in the news ever since. And now it turns out that actually that interest was never paid, and Evergrande can't guarantee future payment. On top of this, I also wanted to touch on the daily Treasury balance, which has just fallen from $213 billion to $159 billion, and today has now fallen to only $125 billion. Therefore, not only is the S&P 500 crashing, the VIX spiking, but the Treasury is almost all out of cash, and Evergrande and the rest of the Chinese financial sector and construction sector is crashing as well. Guys, be sure to let me know down in the comments below what you think about Citadel investors being concerned. Also guys, if you wanted to stay up to date with my new stock and crypto picks, or if you just want some help with AMC and GameStop, be sure to check out the Patreon and the private Discord, linked in the description below, and become part of the team. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.